Hello and welcome to the first video in a series of videos where I'm going to go through my trading strategy and how I find positions and how I take the positions. I mainly trade supply and demand, support and resistance, and I use some patterns to help me find entries and exits, and I'll go through all those patterns. Some of the patterns include actual candlestick patterns, or some of the patterns include areas on the chart of supply and demand, and I also look at level 2, both bookmap level 2, which shows you a visual representation, and I also look at the actual ladder level 2, where you can see areas of selling or buyers and areas of limited orders. But in this video, this is the first one, I'm going to go over supply and demand zones and how I mark them up on the chart. So on my screen is the ES chart, and I trade from the 5-minute chart, and I use the 2-minute chart as reference, and I use the 2-minute chart for my fine-tuning of my entries and exits, and obviously combine 2 minutes with the level 2 as well. 5-minute chart is what I really trade from, and my hourly chart and my daily chart are the charts I look to see where there are areas of supply and demand. So I always start on the daily chart, and sometimes I even go down onto the weekly and monthly just to get an idea of the trend. So as you can see on this weekly chart, we're in an uptrend and we're in a pullback potentially, and we're putting in a bit of a bull flag. So it's interesting to see that we can put in the levels. Very good. What I generally try to do is, that's a better level, and then I will clone the level. In TradingView, you press and hold down the control button, and you can select a line, hold control, and it will let you clone it. And it pretty much clones. Always do a clone because it shows you a proper representation. So we can see right now we're in a bit of a weekly downtrend, and we've broken the uptrend, and potentially we're looking to move back into the upper end of this trend. But we're not going to look at trends, I'm just purely going to look for supply and demand, but it's useful to know where we are. So looking at the daily, I'm going to start off by putting in some daily supply and demands. On TradingView there's an indicator called price range, and I use that quite a lot and it helps me. So I'm going to start off with the demand zones. So start off with the lower end, and what I generally look for is an area where we've got a pivot and then a big move up. And for example, this is a good example. So we've got this big move up and a pivot. So when I draw my demand zone, I take the bottom of the pivot and I take the body of the previous candle, and I always try and go for the opposite colour candle because we've had a period of buying and selling, and this is where you expect to see the demand. So this is that daily demand, and I like to just have a colour code, so template demand daily. So my daily demand is slightly brighter than my hourly demand, which I'll get to. And the reason I didn't go for that pivot is because this area of demand actually takes that pivot into account as well. There's a couple of indicators I like to use as well, and it's a volume 1, visible range volume profile, which is on TradingView, and that gives you a good indication of where on the chart is concentrated volume. Let's open up my pen. So for example, we got this area here on the chart where there's concentrated volume, which makes sense because we've got a big area where we've had lots of buying and selling in that area, buying and selling. It's the tops of pivots, tops of pivots there. It was a indecision and it broke down. We came through, we retested it there, we retested it in this area, and we tested it in this area where we went sideways for a few months before we finally broke out. But no, we did come back and retest that area as well. So these are all areas we'll be looking for when we do our hourly as well. So we got our first daily demand zone. I normally go 1 or 2 pivots down. There's no point doing too many because it clutters up the chart. So the next pivot we can see, maybe we could use this as a demand zone as well. So I'm going from the bottom of that candle to the, I don't tend to use the, zoom in a bit, I try not to use the top wicks. I like the bodies and the bottom wicks when I'm doing demand zones. So that's an area of potential demand. Technically we could use that entire area, and if you go back you can see it's areas of tops and bottoms as well, so it's an important area to know on the daily. And we're taking into account when it came back, we saw the breakout and it pulled back into this demand area. So these are potential plays you can watch for swings as well. Break off daily demand or break off daily support, and then retraces back into that area for a bounce or rejection. So we're going to go with the opposite now, look for supply. In fact, we've still got some more demand to look at. We've got this area here, the more recent. So this is the big move up, and I'm just trying to determine the best area. Probably I would say that to there, because the reason I'm doing that candle instead of the one in front is because that is when we had an area of sellers come in and buyers took them straight back out on that hammer candle. So we know that there were sellers in that area, and we know there were some buyers in that area because we had buy-in from this candle previously. So that's an area of demand. And then let's look at supply. So we've got this area here. So I'm looking for the big move down, and then, but we're looking for the smaller. So I'm going to take the top of that candle to the body of that candle. But as it's supply, I'm going to change it to red. And we've got this area here. So that's the big move down. So I'll probably just go with that area. So that's an area of supply as well. I think that's really it for now. We can mark out support and resistance, and I have a different colour code for daily support and resistance. And what I'm looking for now, we've got areas of supply and demand, but now I'm looking for areas of support and resistance, which is slightly different. So support and resistance will be areas of confluence, and what I mean by that is that's when we see the tops of candles and the tops of candles and bottoms of candles, and you can see there's already a line developing. Tops of candles there, and then maybe the bottoms of candles. So this entire area is technically, we could draw another area of demand or supply just there. Let's do that because that will probably cover us. So we saw the big move down, which is that red bar, so I'm going to use that area there, change it to demand. No, in fact we are above it now, so that is now a demand. And it's no coincidence where we draw a demand in there. We ate time off the clock in this area, and then we came into this demand zone recently and we couldn't break through that 200 moving average and we bounced. So that's a good demand zone to have as well. We came right into that demand. Not in this video, but in my next video I'll explain what I would do to take positions in the demand zone, because obviously these zones are big wide zones and you can't just take it on the entry and put your stop down here, because if you do stop out, that is one hell of a stop and a big stop. Okay, so now I'm looking for support and resistance, and for that I use a horizontal line, and I've got a shortcut on my keyboard which is Alt and H. And one other thing, if we have overlapping, which we'll find out when we get into the hourly in a second, we have overlapping supply and demand zones, then instead of overlapping a supply zone over the top, I'd generally just draw a line, or support and resistance line. So this is an area of previous support, and I have a daily line for that, and it's no coincidence that this happens to be, I'm looking at the bottoms of these candles, we retest it there, and if you look, we've got this lovely head and shoulders pattern which we broke down, we retested it, came back down into this demand, and very recently, the last few days, we've broken through it. So it's no longer a head and shoulders pattern now. This pattern is now invalidated because it's only a head and shoulders pattern while we are below it. So that's my first level, and it's a major level, so if we do come back down to this area, we could potentially be looking for a bounce back up. I do use fibs as well, but that's another video for another day. So next area of resistance is going to be this area here. I do have to, let's get rid of that alert. The good thing about TradingView, once you created the first straight line, so Alt H, and I'm going to put it here, and it's going to be around that area. And why have I chosen that area? I chose it because we've got bottoms of candles here, which, don't forget, that was off screen a second ago. Tops of candles, tops of candles, tops of candles, tops of candles. So we were the floor, then we became the ceiling, and then we became the floor again, then the ceiling, still the ceiling, still the ceiling, and then we tried to break it, we tested it, and we broke through, and as you can see here, it came back, it retested what was the ceiling is now the floor, and we've not quite yet come back down to that area. So that's an area of significance, and it's been very significant over the last few months since 2022, so we'll keep an eye on that. So that's why it's a daily support area. And there's probably a few other areas we can look at as well. And again, I'm looking for areas of confluence, so not just pivots. I'm looking for areas where tops and bottoms of pivots interact with each other, merge into each other. So this area here, so we've got bottoms of candles, tops of candles, tops of candles. So let's just draw that in. And these are zones. It's not areas in stone, you know, it's not a line in the sand. So a bit like the demand and supply zones, when you see them on the hourly, we can drill into this area and find an entry. And then we've got, that's in position as well, and look at that, it's top of that pivot, top of that pivot. And then we're going to come into this area. I quite like that area there. Around there. So technically that is a supply, so we could draw that in as well. So we saw a little move and we saw this big move, so let's draw that in as a potential supply zone. Let's change that to daily supply. And again, with the fine tuning, big areas, so if we do come into these areas, then I use the lines as an area of potential entry, and that's quite a big area, as you can see. And again, I'm looking for a pivot and a big move down, and this area up here is a bit of a, I'll mark it, I like to use the bodies of candles more than anything. So you could mark that one, but there's more touches along here. So the bodies, in fact, this entire area, I think that area there. So you've got the wicks have touched it, the bodies have touched it. So you could potentially bring it into that area there, and the bodies of candles. So these are areas, if you drill down into those candles, they would be areas where we closed or ended, so quite more significant, I think, than the pivot. So, and that's basically how I find my supply and demand zones. We could also use this area down here if we want to make it proper complete. So we saw a move, we saw this double bottom, and look for the big move up. So this area here potentially. This one here, so from there to there. So we saw a smaller red candle and a big move up, so that's an area of demand. I'm just going to switch that over to the daily, and that's pretty much it. And as we get closer, we can drill down to these areas. So once you've got your daily supply, demand, support and resistance areas set up, you can then go down into the hourly. I don't go any lower than hourly because I trade from a 5-minute chart and I only want to use hourly. You can see those trend lines we drew were coming in. Probably no coincidence that these demand zones happen to be at the top of these trend lines. So this trend line is only visible on, it shouldn't be on weeks, but anyway, it's up to hours. It's weeks because I put it on the week, so I'll leave that there. But I hide it off the daily just to keep it decluttered. So potentially, now we're looking at hourly areas for demand, supply and demand. And we are currently at 44.2750. So we've got this area covered on the daily. You can see we've got two areas overlapping a bit as well. And even though we did it on the daily and look at it on the hourly, you can see where the tops of this demand zone actually is influential. So even though we saw it in the daily and we were looking way back months earlier, it's still in play. So this is areas we can watch for. So if we do ever come back down to this area, we can see straight away this is a potential area on the top end of this demand zone. So what I'm looking for now is supply and demand on the hourly, and I've got a slightly different shade of reds and greens for this. And so my first area is here. And so we've got supply hourly, so slightly, it's not as bright, doesn't stand out as far. So if the price does come up to these areas, we can fine tune these areas. You can see this daily area covers a big area, so I probably would fine tune that. Maybe we can fine tune that, we can get rid of the daily level, this area here, this is a supply zone here. So we can fine tune that down, and what I'm looking for, the big move down, but I'm looking for the previous area of, so that is how I would define it. And so that's now an hourly. We've taken the daily and we've just now converted it into a hourly. So rather than having that entire area, we fine-tuned it a little bit. So we've got a couple of good daily areas, a couple hourly areas. Got that area there at 45.66, 4,500 supply zones. No coincidence, is a nice round number, and it's an area on our chart where we sat at for a few days and then we broke down. Potentially that's our next target as well, 4,500. But you have to break through this trend line. I do like to start from the bottom so we can fine tune. So here's a good example of where the previous candle is actually bigger than the candle where we change colour. We can't have a demand zone in the hourly that big because that's almost a $40 zone, so we need to fine tune it. And what I generally do is I just take the pivot of the colour what changed the direction. And technically we're inside the zone, so I'd probably just want to find an area of I've got an hourly template for that, so it's a hashed line. So if you ever come back down to this area, I'll be watching potentially that area, and basically it's bottoms. See this inverse head and shoulders, so it's the bottoms of these shoulders, the bottoms of those candles. I'm sure if I zoom out, it's probably if I go back far enough, it's probably an area of confluence, which it is. Look at that, so it came down bottoms of candles, tops of candles, bottoms of candles, tops, bottoms, and it broke out. So all these areas are pretty good to have, and it's amazing how history repeats itself. Bottoms of candles again, and then it breaks out. So we've got supply, we've got demand zone. We could really say this is an area of demand around here, but we're covered by this zone. And I think that's it really. We've got our next two potential supply zones in the hourly, so I'm looking at current prices here and I'm looking for the next pivots, next two pivots. And then let's find the areas of supply, support and resistance. And what I'm doing, I'm trying to find an area in the hourly where we've got major pivots, that area there. So tops of these candles, bottoms of these candles are kind of gone through the middle. The tops of that candle there, bottoms of candles, and bear in mind I based it on an area over here, going back to June this year, 23. And if you come back to more recent days, more recent times, come back to September, it's still an area in play which we're watching for. So it's like 44.92, 4,500. So, and then if I were to find a more recent area, it's got to be the bottoms of these candles. And I'll tell you why. It's tops and bottoms of candles there, bottoms of this candle, and you can see we came down, we pulled back into that area. So 44.38 is an area to watch for, and that's where we're coming up to. That's probably our next rejection area actually. And that's it really. There's no, if we were to find an area, probably this area as well. And again, I'm looking at pivots from over here, tops of candles, tops of pivots, and potentially we've got an area we might pull back down to. So it's been significant in the past and most likely will be significant again in the future. And I think that's it. If you have any questions or any refinements you want to make to this video, add them into the comments section below and I'll read them and reply back to you. And maybe I can make a new video on supply and demand and support and resistance, which will hopefully help you even further. I'm pretty good at eyeballing these positions. You can see when I was putting them up, you can set the magnet up and get the magnet part to hook directly onto pivots. But I'm fine. But I don't like to be, my zones and my supply and my support and resistance lines are not lines in the sand. They're just areas. So for example, this area here, I'd just be watching that entire area for rejection, and then I'd drill down. For example, I'll go down into the 5-minute chart. So let's just do an example. So that's the hourly, this is the daily. So I'll be watching the hourly, so in every day before I trade, and you can join me on my live pre-market videos where I go through what are the current levels for the current day. And like I said, I normally use the same technique I just shown you, putting my support and resistance and my supply and demand zones in the hourly. I like to be aware of the daily as well to see where we are, so I like to pick a trend. So as you can see on this daily, we are in an uptrend and a pullback in an uptrend. Let's just put, one thing I've not done is just linked up. So kind of close to an uptrend. We're still in the uptrend. We haven't broken this line yet, and potentially so this is the area to break, to confirm. So we're in a micro daily downtrend. Potentially we could come back down, or we could be just playing this trend back up. We bounced at bottom, we're going to come back up and maybe just play this trend line back up, back to all-time highs again. We don't know that, and so we can just assume and base our trading based on the current chart and how we see it. I think that's covered everything. I was just going to show you how I quickly fine-tune my entries. So let's go back to, say, this area here. Say on Friday I was watching this area, and I'll do a better video on this. This will be the next video on my entries. And so I'm coming in, I've already got a predefined area set up, and I know I want to get an area here, so I'd get in long. What I would wait for is confirmation of the long. So this is a perfect confirmation. So we come in, we sold off quite heavily, pulled back, and then we put in this lovely hammer candle and on higher volume as well. We pulled back, we retested an area. This is an area we'll have on watch, probably from a previous pivot, and then we can either get the break of that and that break of that pivot to confirm a change in trend, because we put in a low there, a higher low, and then we put in a new higher low there before putting in a higher high way up here. And so they're the areas I'll be watching for. That's a confirmation area. If you're confident and it's a higher probability, you can probably layer in a little bit as well. And so when you're coming down, you're triggering orders as you're coming down, and you've got the better price. So I have two ways of trading. I have higher probability and lower probability trades. A higher probability trade I will layer in, and a lower probability trade, or a high risk trade I call it, I'd wait for confirmation. So I'd wait for it to come down, put in this hammer candle, and I'd buy it on the break and with my stop at the low. Or I may wait for a break and retest and confirm a double bottom or a higher low to make the move back up. So that's how I do my trades. I'll do another video on these and maybe some live examples as well. But that's that's just a perfect area of showing where we come into a level, and that's what happens. That's the areas I'm watching for. And the same, if you look up here, these levels bounced. So you can take day trades on these hourly levels. Area bounced, a nice double bottom there. You could have just ran it back up, came back in. So these areas, like I said, they're not lines. Sometimes they're pretty accurate, the lines, but they're just areas of interest. So here, if it hits my level, I may, if it's a high probability, I may have just tried a speculative trade there and stopped myself out. But then I'll be waiting for a candle like this on higher volume. This is pre-market, so I may not have taken that. But look at this pattern setting up. So we've got this higher low, higher high, higher low, just about higher high, you could just argue the case, higher low, and then boom. And then look into the trend line, this lovely head and shoulders pattern, neckline there. If you took the neckline, a break and retest the neckline back down. So that's two trades, two good trades in a day. Or you can just, if you see that the head and shoulders pattern setting up, you could preempt it by taking it below that shoulder. But it's not a real head and shoulders until it breaks, and you can see it came into that area and broke down. And then we came back into the trend line area again. It's not a line, it's just an area. So if you know there could be potential resistance, you'll have this area on watch. Look at that for a nice double top. And if you're taking that double top, you'd be laughing all the way to the bank. And come into that area again, we saw there. So loads and loads of trades can be taken from looking at support and resistance and supply and demand. But if I get into a daily or weekly, a daily or hourly supply and demand area, then I'm extra vigilant because I'm watching for potential bounce or rejections. And so today, what am I going to be watching for? So two areas I'm watching for today. I've got potential bounce in this area, and no coincidence is coming into this trend line area as well. So I'll be watching for these two areas converging, and may not get it today, maybe tomorrow. And then I'll be potentially waiting for a rejection off of this area. But depend on where we are. In the pre-market videos, I always say anything which is in my videos, if we're quite close to an area, that's a higher risk rejection, so I will go in with half the size or a quarter size. And if we've got some way to come down like here, then this will be a higher probability bounce, and then I'll just set up some levels in this area for the bounce. And that's it really. Okay, well, hopefully it makes sense. This is supply and demand, support and resistance tutorial. And going back to the supply and demand area again, it's subjective. A lot of people will have their own ways of setting it up. Me personally, I prefer, like, I'll do one more. I prefer to look for the big move and then go to the previous candle, and that would be too big. So I would probably just go 50% of that candle or the previous bar. And then, for example, again, I'll do another one at the bottom. So this one here, we saw this move up. So I'll take that candle and I'll go to the body. And if it's too big, potentially, then I'll just do 50% of the candle. But the idea is I want to get the area where we saw most of the buying and selling. And that's it. Okay, thank you for watching. And don't forget to hit the like button and hit the subscribe button to be reminded when there's new content such as my live daily videos or any more tutorials. Thanks for watching.